Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, here with Joel Elconin and Dennis Dick. On today's show, a couple big names in legal trouble, Johnson & Johnson and Goldman Sachs, both in the crosshairs with regards to various lawsuits. We'll talk about that. We'll talk about just the overall weakness in the banks and retail. We got a couple interesting ratings, a couple interesting earnings to discuss, and our guest, Kevin Kelly, will join us at 8:35 to talk about REITs and the best and worst of what's going on in REIT land. That'll be again at 8:35. Joel, how was your weekend, and what's going on in the overnight market here?
I'm doing okay here, Spencer. I mean, usually Dennis complains to the as of cold. Well, I'm going to complain that I wrenched my back bringing in some boxes. Miss Emily moved home yesterday from Syracuse. So if I'm not moving around a lot, that's the reason the market is not doing well this morning, listeners. We had a rally overnight that is faded. We are currently trading down 6 1/4 at 25.99 1/4. Our pre-market low, 95.5, and that's Friday's low right there at 97 1/4. I'm looking for a 20-handle drop out after that to 25.72 1/4. Love to see this market unchanged for a lower risk short. Crude's up 40 cents at 51.87. Really still in a major trading range between 50.5 and now 53.5. We'll see if crude makes a move before the end of the year. Gold up 240 at 1243.80. Silver just hanging out at 1470, up 6 cents. And Bitcoin always dipping under 3,000, up $255 at $3,405. Triple D, how are things in the trade cave? And did you see anything on Friday night of interest?
There are a few things. You know what? It was actually very, very quiet trading Friday night, and I actually take off a lot of times early on Friday nights. So I left around 5:30 Friday night, so I only trade for an hour and a half. If there's action, I'll stay the whole time. But it was quiet trade, and that's typical for a Friday night. But we are seeing a little bit of follow-through from the selling pressure there on Friday day, because it was not a pretty day for the markets here. Obviously, weakness, Dow losing 500 more points. I mean, we're down near the lows here now. Again, I'm just going to say, anybody who was chasing that rally last week, not rewarded for chasing. Once again, this is not the market to chase. And there's a few stocks that obviously have performed better than others. Basically, Procter & Gamble is not one of those few stocks. But really, this market is just not pretty. And you were kind of looking under the hood over the weekend, and you think, this is usually when retail stocks start to show some life, and they're actually starting to show more death than life.
Dennis, Sid wants to know, is there any hope for a market rally? Are you throwing in the towel?
No, not throwing in the towel, but
Santa Claus rally.
Yeah, and the Santa Claus rally, and we should get obviously Hirsch on here, because he's the one, from Stock Traders Almanac that, obviously I was involved with some of that, and has followed that for years and years and years, the Santa Claus rally. Santa Claus rally technically is, and it is, do we have this in front? I'm trying to remember. It's the last 5 trading days of December and the first 2 days of January. Is that right?
Very good, Dennis.
That's what I think it is. That's how Hirsch defines it.
That's what it's defined as in the almanac. Very good.
Yeah. Everybody always thinks it's the rally before Christmas, and it's actually not true. It's a rally after Christmas. So is there hope for that? That week is usually always good. Yeah, sure there is. I mean, this market's so volatile, anything can happen. But you've got to keep looking under the hood, and we just don't have the leadership to say, hey, let's go in and start buying hand over fist here right now. I mean, Apple had a terrible day on Friday. It's been leading the charge down. It looks like it's going to retest the low from 4 days ago when it got down to $163. Amazon was not good. There was a new breakdown for Amazon. One stock that held up okay was Facebook. But that being said, it held up okay, but it was still not great either. Alibaba has now broken down below 150 bucks. It was 168 just 7 trading sessions ago. So it's tough. You look under the hood here, and you see a stock like Procter & Gamble, you say, okay, well, there's obviously some defensive stocks are playing okay, but then you get Johnson & Johnson on Friday, and you think, man, everybody was hiding in that stock, just got annihilated. So are they not going to be worrying about, maybe some of their other stocks that have held up very well? I think they are. Merck was down significantly. It's one that's been, Honey's been holding up. One of the biggest for my investment portfolio, but I've taken some of the profits off of that because I'm nervous. Pfizer's held up pretty well. It was weak on Friday. I mean, you're starting to see weakness spill into pretty much everything. So that's concerning. Now, it can turn and everything can change. That's why I keep listening to the radio show. Just because we're bearish, today doesn't mean we're going to be bearish 3 days from now. This market changes a lot. But I can't come in here. I don't have any buy signals. That's what I'm looking at this morning. I don't see any buy signals out there that saying, hey, this is a bottom. It's time to jump in. Anything can happen. But I don't see anything telling me that there are any buy signals here.
Hey, have you, Grant Wilkerson is pointing out the XLU chart. Have you looked at that? I mean, is that the place to hide in utilities? I mean, look at that chart. That is a nice look.
Yeah, typically they do. I mean, and we know that those obviously perform a lot better. And utilities will usually always have, a negative correlation with the overall market. So it's not surprising. Gold and silver, same thing. Gold has been okay. But does that mean, just because gold's up on Friday and utilities, had an okay day, does that mean when this market goes to turn, the market is going to flush out of those things? Or if the market really goes into hard selling, they're going to sell all assets? I don't know. So I don't think I'm just running in here and buying all utility stocks, especially some of these utility stocks trade 20 times. I watched what happened with PCG. So there's obviously still, that was obviously company specific to a certain extent, but, it's not always safe. And, people think, oh, that's a safety trade. Let's just go there. I'll be safe with my money. In a real sell-off like 2007, 2008, go back and look at the charts of the XLU during then as well. They sell everything. If it really starts to get ugly. And I don't know if it's going to that, but just caution to this, the person who just thinks I'm going to throw all my money in utilities and it's going to be safe.
All right, that was a nice segue to some news on PCG here.
Well, we had a lot of segue potential in there. I don't want to go to PCG first. I want to go to Johnson & Johnson.
Okay.
Because that move in J&J had to be one of the biggest moves I've seen in J&J in a decade. It was down over 10%. We all know talcum powder issues. Did your mom use the talcum powder on you there, Joel, when you were a kid?
That explains it.
That might explain a few things.
Do you want me to give her a call and ask her?
Anyways, I don't know. Maybe my mom used it on me too, I'm sure. So I don't know. But all I know is, the news that came out, people were saying, well, this is already out. We knew about this talcum powder issue with asbestos, a long time ago. Why are they hitting it so hard? Because the news was that some of the execs in Johnson & Johnson knew about it, and they kept selling the powder. If that's the case, liability just went through the roof. So I don't know if that's true. We don't know if that's true or not. Obviously, Johnson & Johnson denying that they knew anything. But there's a few execs that knew something in there. That's big trouble.
You know what's interesting? You know what's interesting here? To see the analysts, it was funny to watch them one come out positive on the stock on Friday. Well, we have Morgan Stanley this morning coming out saying the stock reaction is not supported by science. You have JP Morgan came out positive. Susquehanna came out positive, or at least positive and related to the news from Friday, or the move on Friday saying it wasn't justified. Who else? Wells Fargo. So they're all saying that the move is not justified because there's a known issue already. But I haven't seen a move like that in J&J, I think, ever.
Yeah, and then you also had, did anybody watch the 60 Minutes piece? I did not catch it, but they were going to talk about opioids, I believe, on 60 Minutes. Not that, this is anything in relation to Johnson & Johnson's fall here, but I believe Johnson & Johnson sells opioids. So I don't know if anybody caught that. I did not, and I'm not really seeing very many headlines from it, so maybe it wasn't but I was just thinking when it rains it pours, because that's not great news for J&J JNJ either talk about that stuff. So anyways, if anybody caught that, maybe they can throw it in the chat and just or tweet it at me and just kind of give me a 168 character. How many characters we got on Twitter now? About 144. What are they? 288 or something?
240. I don't remember. 240.
Anyways, if you did watch it, feel free to tweet at me and I'll mention it.
Real quick, J&J's traded down here $1.34. Just very, very quiet trade here at the 131.5 level. If you are trying to pick a bottom in this, I think you look at Friday's low of 130.20. If in fact that's taken out, I don't see any weekly support until under 130 at 128.93. But the fact that it had that much of a decline and is not really getting any kind of a rebound this morning, getting back some of those losses, I think you got some more work to do here on the downside here in J&J, and could easily shake that 130.20 low. 133 was your close.
Let's take the talcum powder issue. Just think about everybody who is long this stock right now. It's everybody who is playing market defense. This was a defensive stock. This was a stock that was very close to its all-time highs before Friday's move. You have got a lot of people caught long this stock. Not everybody's day traders. So if you had like investors that were hiding or swing traders that were hiding that have a day job and they come in Friday night and they see what happened to Johnson & Johnson, they're scared. And you're having people, that's what you're seeing this morning. It's what the follow through, it's what the 2-day move I always talk about is when you get a big move that is kind of out of the ordinary for a stock, often the next morning you get a continued flush because the Johnny come latelys and saying, holy cow, I don't know what's going on here. I need to sell this too. They call their broker in the morning and say, get me the hell out. And that's what I think you're seeing a little bit this morning with the follow through. Can make a double bottom at the 130.20? Well, there's potential for that. So as a day trade, maybe you could try, from 130. It takes 130.20 out though, then you're going, back down in the 129s. So 130 is the absolute bogey if this needs to hold, or we could get some serious follow through. But I'd be scared on this just as a follow through. It could eventually see 120, and by eventually, I mean, that could happen fairly quickly.
And JJ is a kind of stock that trades pretty good volume. It's on the New York Stock Exchange, and if it wants to make a bottom or a top, it will. It will give you 2 or 3 sessions. It's just not a stock that you can just look at that 130.20 low and say, okay, things got overdone on Friday. They're gonna test that low. They're gonna breach that low. They're gonna they'll do a couple different days, a couple different patterns. You're also right. There's people that have been in this stock forever. I mean, even if you go back to, let's say, 2013, when the stock was at 71.55, this is the start of 2013. Hey, I'm out. I still got plenty of profits here. I don't care about all you people that bought it from 132 to what did it hit last week? 148. The all-time high was made at 148.99 on December 4th. They don't care. They're just going to be getting out here. So, if you're trying to pick a bottom of this, wait for some kind of at least technical formation to form where, you're not just leading on one low.
A lot of companies obviously going to be impacted by that 60 minutes. Zozo Trader, who often comes to the chat, hey Zozo, just tweeted the piece at me from the 60 minutes. They did air something on it, but there's obviously a lot of drug companies that sell opioids. So I don't know if they mentioned any specifically or not. That's what I would be concerned about if they obviously mentioned a specific ticker. But so I don't really see anything to fall out here because there's a lot of companies obviously that sell opioids.
Okay.
There's gold, like you said off the bat, and I'm kind of stuffed up.
Okay, and you're putting a drag.
It's an overnight thing. I really wasn't even sick. It just kind of overnight here. I just woke up and I was like, oh, I'm kind of stuffy here. But the kids were sick a couple of days ago, so you
gotta get it. You gotta get it.
Well, yeah, and it's just this time of year. Maybe it's not going to be bad or something. Maybe I'm just tired, overly tired. I was up late too, so. It's one of those.
One more note. Can I make one more note for our longer term J&J followers here? We talk about that low of 130.20 and everything. Keep a real close eye on 133. That was your close from Friday. So that's like after the initial news hit. That's where the institutions are marked after a 15-point drop. So, it's hard keying on lows and moves because they can change very quickly. But, thinking about this long term, 133, that was a close on just a monster volume day. 6 million shares traded on Thursday, 58 million shares traded on Friday. A high volume day, a turning point in the stock. 133, that's your number here. Long term, going out in Johnson and Johnson. Let's go to the Goldman Sachs news here. I mean, this thing is getting tarred and feathered.
Yeah, dear Lord. It is at a 2-year low this morning on news that Malaysian authorities filed criminal charges against Goldman Sachs in connection with their involvement in the 1MDB scandal, which has, of course, been going on for several years now and does not seem to like it'll be resolved anytime soon. But their connection, who knows how they're involved in this, but Malaysian authorities filed charges against them, and that's what's hitting the stock this morning. And it is at a 2-year low.
This is just relentless selling for a month and a half now. There's been a couple little rallies in there, but really since this broke 30, and this is why charts and you get a big red candle that's counter to a move, you often have follow through. And look back, this is what we talk about on the show, and this is where I like to use my technical analysis more than anything, is when I see that counter trend move with a big red candle there. And I'm looking back to November the 9th, where you had the stock, you had Goldman Sachs going up for 1, 2, 3, 4, a few days in a row, and then it was consolidating. It looked like it wanted to break out November the 8th, kind of snuck its head up to 234, and then you have the big red counter move. That's the move which says, whoa, something's going on. I need to get out, 222. The very next day, you get another flush down to 205. Now everybody's caught long. All the short-term traders, herd mentality, and not only that, the loss aversion trade where people don't want to take a loss. They say, okay, if Goldman comes back up to 215 or 220, I'm going to get out. I'm going to try to get my money back. Never gives you a chance. 210 slowly leaks and leaks to 200 and leaks to 190. Give you a little rally to 197. Starts leaking again, 190, 180, 170. And those people who are, maybe even leaning on a bottom, thinking, it's going to bottom at 210, no hope, and the people who are obviously praying the breakout before that, no hope either. So this is why the 90-day chart, the 3-month chart is so important to look at. Just looking and taking it, sitting back and looking at what the action is. What has it been doing? Do we have a counter trend move? Do we have people caught? With JNJ, I believe we have people caught. I'm not going to say it's going to continue down for 3 months here, but these headlines are not going to go away, I don't believe, anytime soon. I don't think this is bouncing back today. I think if it goes up to 136 or 137 in the next few days, I think they'll be met with more sellers who were playing defense and people underwater. I think you have an overhead supply issue now. And I believe the path of least resistance for JNJ is farther down.
Yeah, just finishing up on Dennis's commentary on the Goldman Sachs. That had to be when the initial news hit on the, MDBS or whatever. And then I know on the 12th, 22 to 206, you had a big volume day. And then I just want to note, we don't talk a lot about volume, but at the end of November, you had that little rally from 190, really 189.10 up to 190, 198.5, let's call it. Some of the smallest volume days that Goldman had in weeks. So, going against the trend, you have a counter trend rally on light volume. That doesn't mean there's new buyers out there. That just means that the sellers are just taking a break here. Pre-market low, 168.80. Just slumping there. I will have to go a little bit farther out. We are below 178. Boy, oh boy, 168.45. We're trading below that, right there, right now. That was a low in 2016, and then looking for another support level after that. 165.51, but I don't think you can really have a meeting.
Those are all minor support levels in my opinion. I really look, and we'll do the Harlan Pion thing. Back the chart out. I backed it out to an 8-year chart here. What level kind of jumps out at you? You know what level jumps out at me? Just
140.
50. I'll just say 150 because you had two lows in 2014, like 151, 153, and then he kind of went through it in 2016. But the whole area where it kind of was, it was 140 a couple times, it was 160, just kind of round. It's like the whole 150 just kind of jumps out at you. it looks like that's where it wants to go eventually, is 150. So is it going to go straight there? Nothing goes straight there. You'll have these pops. But again, like Spinner and I say in the chat all the time, sell rips on weak stocks and buy dips on strong stocks. Goldman Sachs is a weak stock. I'd be looking for rips to sell.
We got to get Anne Marie back on. Remember, I don't think you were on that.
She's right. Yeah, I was on.
Yeah, you were pretty busy, but boy, and there's been some really vicious rips. I mean, there's been
serious opportunities to sell.
Yeah,
I used the first one. And, I used the first one to lighten up my portfolio to the highest cash component it's had in a long time. And then I was like, it came back like 2-3 times back up there. And I keep like, why didn't I get back in? Why didn't I get back in? And now I'm starting to feel pretty good that I didn't get back in. But I mean, like there was 2, 3, 4. Look at the SPY. So originally, when I was nervous about the market, was on the original spike. So we had the 2 huge red candles back in October. And then we went from like 270 up to 280. It was like a 1,000-point Dow rally, 100-point S&P rally. I was like, I'm using this to lighten up. And I sold some of my MasterCard. Long-term positions that I've held for a decade. I sold some of my Merck. I sold some of my other underperforming stocks. I sold some of my Micron that I was down in. I used that day. I sold a bunch of stocks. That would have been back on like October the 16th or 17th. And then, I watched the market sell off all the way in October down to the lows, and I was feeling pretty good about those sales. But then we came all the way back up in November. And then I was feeling like, oh man, why didn't I rebuy? And then we sold all the way back off. And then we came back up in December. We got up to 280 again. I'm like, why didn't I rebuy? So maybe I should be rebuying here. Maybe it's going to do the 4th time here. But eventually you pound on these lows enough, eventually you're going to take them out. So that's why I'm remaining in the bear camp here. I hung through all those rallies there in the bear camp. So I'm going to stay in the bear camp to a certain extent. But I'm not fully in the bear camp. So you're still going to get rallies here to sell. So, and you're going to get dips to buy too. So as a trader, I'm buying dips. And I'm selling reps. And even as an investor, that's how I usually do it. But I'm not adding to my investment portfolio here. Maybe I should be, but I just think there's 2 loans here right now, and I'm nervous.
No, that's that's a good way to put it. And the other thing too is here, that 2603 low. Remember, we had that back in October, and that was going to be the bottom. That was going to be the bottom. And now here we are. We took a day, and we're just no move to 26. Well, I guess we do it up to 26.1675 overnight. But here you are sitting at the former lows of the move, and everyone's just looking at each other here, waiting for the next shoe to drop. We also, have macro things going on with the Fed on Wednesday, a possible government shutdown 5 days from now. And then, you still have the China thing unresolved. I mean, there's a lot of things out here that make people nervous about the market.
Spencer, you've been quiet in the background, and sometimes it's good to get a different perspective than, me and Joel here. And, you've seen this market really chop around here in the last couple of months. We've seen volatility that we haven't seen in years here. As, a longer-term guy, not a short-term trader, but, as an investor, and, as obviously somebody who listens to our content all the time, what are your thoughts here when you look at just the overall picture?
I hear you so much. I hear you in my sleep. It's actually it's actually quite.
So
sick.
I'm filling your thoughts is the problem. I'm polluting your mind.
It's actually quite sick. No, I welcome any sort of like what we were saying on the preview market show. What are we down this year? Like 2%, 2.5%?
Yeah.
In the grand scheme, what is that? That's nothing. That's two.
Yeah. It's not that bad of a year.
No, I welcome, from a long-term investing standpoint, I welcome a clear, I just want clarity, man. If it's going to be a long-term, like a real sell-off, then let's go. Let's sell it off. And if it's not, then let's go higher. Let's roll. I'm sick of this trading range nonsense. I don't like it because it doesn't do anything. On the upside, I can't throw it. I can't put money in. I can't take it out because I don't know which way we're going. So I'm stuck.
I mean, it's a great perspective when you say we're only down 2.5% because here, we're talking like the world's ending, and we are only down 2. This is why we're in the trading range. It's a great point, Spencer. This is why we're in the trading range, because you still have a huge battle between the bulls and the bears here. There are bulls out here that believe that the October lows on the S&P and the recent lows December retest kind of held. I know we kind of took it out a little bit, but overall we're still kind of hanging out there. So, and there's people who are going to believe that, this is, a dip to buy, and that have been rewarded for buying dips for the last 7 years. So, and maybe that's the case, and it might be the case. And I don't think anybody, especially on, Mule, have a crystal ball here. And we've said this before, to predict this market out more than 6 months. I'm just nervous. So that's why I've raised some more cash, because I don't know if this is, something that's bigger. And I see what's happening in Europe, and that's always what scared me even more is, when you see Deutsche Bank at $8 and you see, Barclays at $7 and ING. I mean, these European banks are a mess. And you see our banks, they're a mess. And I'm like, man, if the financials keep showing this kind of weakness here, there's got to be something more going on. And, obviously interest rates were going up here for a little while. Usually that you can say, okay, well, but the yield curve is flattening and that's not good. You can give all those different arguments, but there's just some things to, if you are nervous about this market, I mean, I hate selling in the whole. It's been nice to sell in these 2-3 rallies that we've had, and you'll probably get more rallies to sell, but it's a lot of things unknown right now.
All right, getting some stuff out of the chat. Why don't we, since we were talking about retail, let's go over Costco, see if we could have it there.
Another defensive stock that you got. These defensive stocks aren't that defensive. Go.
I mean, it opened lower and kept on going lower.
Did we say on the show? Did we not specifically say we get some things wrong? But we said that 217 goes. Came out of the door. Could be at $200, and I didn't say on Friday, but I said that's where it could eventually end up going. It lost another $10. I don't think it's going to lose that much in one day.
No.
That just shows you how nervous this market is. And, here's Costco. You go in those stores, they're busy. I was in a Costco just last Thursday. I was in a Costco. You can't find a parking spot in the lot. So they're still doing well. But definitely the whole sentiment towards anything right now, if they get any hiccup of something, maybe not going that great, they sell the hell out of it. And these numbers, maybe the guy, I don't even know what it was, Spencer. Was it the guidance that really hit the stock? What was the disappointment here that really started knocking Costco down? I know the numbers weren't great.
They missed their sales number for Q1 for the prior quarter, but I don't know if anything in it was that terrible. I mean, aside from a missed sales number, comps were okay. I don't really know why they hit it so bad, honestly.
Yeah, it's just this market wants an excuse to take profits or get. Costco has been a great performer. Let's look at the weekly, and you can even go out in 2018. At the beginning of 2018, the stock started, where we started, about $190. It's a stock we're up on in the year. And money managers are looking to raise cash. This is a lot of times they sell their winners, and only investors, they do the same thing, and it's often a mistake, but it's what they do. They're looking. People don't like selling losers. And Costco is a winner for a lot of people. And all of a sudden they get a little quarter. It's like, I'm not letting my Costco gains go away. I'm going to sell it. And that's it. A stock like Costco, I'd love to have in my investment portfolio. I wish I would have bought it when it had, the Walmart, when they were getting Amazon and they bought Whole Foods and got down to $150. I'd love to get another chance. But again, you look at the Costco multiple and it trades at a premium. It trades at a premium to Walmart, trades at a premium to Target, probably because, obviously it's, a little bit more sticky customer. People love Costco. They've performed well for a while. But what are they trading? 25 times or 27 times forward earnings? What's the PE? Do you got it in front of you, Spencer? It's higher than the other ones.
Let me pull it up real fast here.
And they're selling higher PE stuff.
Forward PE is, 26. Nice one.
It's 26, in a market that's got the forward PE going to 16, 17 right now. So you're trading almost not twice as much, but 70% premium there. Well, that's a little bit scary.
The industry average 20%, and that's just general broad discount stores industry. But so
question Jazz and say, what level would I buy Costco? At the 180, I'd probably try. If it got back down 200, it's probably going to bounce. It's a big psychological level. It's had a good pop. I think if you're buying 207, I think you're right. I think you're going to get a shot on Costco at 200 here. And I think you're going to get a shot maybe even by the end of the year. Now, are you going to get a shot at 180? Maybe I'm being, a little bit, extended. But again, the PE is not cheap. And that's why Costco has not been in I'm a PE guy. And, in this environment, it's helped me a bit with my investment portfolio. But the low PE stocks haven't done great either. So, I'm not going to say my portfolio has been awesome, my investment portfolio. My portfolio is getting hit just like everybody else. When it's going down, it's long. I'm an investor for the long term, long investments. I'm complaining to a couple of my buddies over there, Bright Trading, and just saying, here I am making, had two of my best trading months I've had in years. And I'm like, I watch my investment portfolio falling more than I'm making trading. So it's like, but I mean, you got to stick, I've obviously made a lot of money over the last 7 years on my investments. They've done well because it's been in a bull market. So, I try to stay the course. But even though I raised some of that cash, like I said, I'm getting up to a point where I'm like, I don't even know, I haven't analyzed it, but I probably am sitting at over 40% cash. I still 60% of my market invested. So it's still ugly. When the market sells off 3-4%, you're still seeing your current investments fall. I wish I would have been 100% cash, but I never do that long term because look, I'm 42 years old. I don't need the money for like 20 years probably, or maybe even. So I got to kind of stay the corner with my long term stuff. Do I play with it a bit? Sure, I do, but I try not to trade my investment portfolio, even though I catch myself doing it often too much.
Just looking at this Costco here. Keep an eye on Friday's low. If you're looking at a 2-day move, that was 205.51. And then if you go to your weeklies here, I mean, you had a big ramp up from 197. This was in June of 2018, up to the all-time high. So there's some weekly lows at like 203.20. 200 is a psychological level, but I have a 180 number. I'd be looking at 196. I see 3 weekly lows, a bunch of daily lows, right into $196 area. But first things first, holding Friday's low. It doesn't look like we're going to do that. Pressure on the S&Ps here, Dennis. We are about to make a new low on the session here. You're open. It's interesting, Dennis. The opening tick in the SPOOs was 95.5, and they ran it up, and now you're coming back down to that pre-model, folks. So any overnight shorts were on the pre-market low.
Just a question from Fuzzy in the chat. I answered him in the chat, but I'd like to answer it on the show here too for the listeners. He's just saying, can I afford to go through another bear market of like 40% down? This is what I asked myself this question when we had the starting. Obviously, I had multiple chances to do it, but when I was raising cash and selling some of my Merck and selling some of my MasterCard long-term winners, like, I'm talking on MasterCard. I bought MasterCard in the financial crisis right after. At $16, I'm averaged it. I sold like a third of my position. There over $200 there back in October, something I hadn't sold at all. So, and Merck, the same thing. I bought that back at $30. It's big winner, and I'm like, you know what? I just am not comfortable here. I don't want to raise more cash. And I went through the financial crisis. My best trading years, but those are your worst investing years. I had investments, and I can remember joking in the financial crisis too. I was like, man, the same thing. I was like making so much money trading because obviously I'm market neutral, market inefficiencies, lots of money to be making trading. But I was losing to my investment portfolio, and I don't know what I ended up eventually losing my investment portfolio. But I bet, during the crisis, I bet lost 30 or 40%. I was in conservative stocks, but the market went from 1,600 to 666. So the market was down like almost 70%. That's S&P. So do I want to go through that again? Hell no. I don't want to go through that again. That's why I think I've always had a higher cash component than probably, if investment managers would have looked at my investment portfolio all through it, it was probably a mistake because we went up a lot all through in the 2010, 2011, 2012. They'd be like, why do you have 20% cash, or why do you have 25% cash? Well, you know why? I went through 2008, and I'm going to always know that if I have that 25% cash and the market implodes and we lose like 80 or 90%, I can live on what I have with that 25% cash component. So that's, just my cushion. It's my comfort cushion. So, and everybody's comfort cushion is different. I did very well trading. So I feel like, that little bit of cash that I have there, I feel like I'm safe. And I know you did the same thing, Joel. You got burned in the financial crisis to a certain extent as well. We all did if you were going through that in 2007, 2008. And you never went fully invested after that either for the same reasons, did you not?
No. And I got, so I didn't have to stomach most of that. Did get in a little bit late after the, after the financial crisis. But, I mean, my problem always been too much cash. So
Me too, after the financial crisis.
Yeah. So, I can't, and now it's just, much more proactive. You have docs. And so, you're doing that where, with already having such a high cash level, my power is just not to buy more and just wait for the opportunities to buy more because I'm going to continue to put money into the market for the long term. So yeah, I'm taking hits and stuff, but like I know I'm always sitting on like too much cash. So it's kind of like when Warren says, he wants Apple to go down so he can, buy more when the market goes down. So little different trading styles here, but we're late for our first guest here to get a different perspective on the market. Spencer, who are we going to dial up?
I would say we are almost right on time. Kevin Kelly, co-founder and CEO of Benchmark Investments. We're gonna ask him this very question, and also we're going to talk through the REIT market. We'll be right back in a moment with Kevin Kelly. All right, welcome back, everyone. We are now joined by Kevin Kelly, the co-founder and CEO of Benchmark Investments. Kelly, how's it going this morning?
It's going very well. How about you guys?
We're doing all right.
We're doing okay here. The market's obviously not reacting well for the Santa Claus rally here, taking out Friday's low in the pre-market and after-hours session here. But we like to have different guests on, talk about different things, maybe just get away from the real short-term trading and maybe take a little bit bigger picture of the market here. So one of your comments was here, Tina left the bar as the Fed has removed the punch bowl. I think that statement has a lot of implications. Your comments on that?
Yeah. So the aspect is that when we look back at 2017, it was a market that had no volatility, right? I mean, there was de minimis volatility. So that was because the market was trading off of a whole notion that there was no alternative, right? So there's no alternative. So go into stocks, just buy them. We had a great year. The dollar was weak. And so when we look at realized volatility, there were times that realized volatility was less than 5 when we had implied volatility of 11. So what's really happened now is that Tina has left the bar. There are alternatives to stocks now. And notably, it's cash. Cash is finally king in more than one way. And so when I was talking about Tina leaving the bar as the Fed removed the punch bowl, it's because you can get higher yields on cash than 60% of the S&P 500. So that gives you an alternative. So you can wait as companies start to give better guidance, or you start to get a read through on a lot of the macroeconomic concerns that is happening. And so that's one aspect. And then the second, and I think more important aspect, is that it's really made investors focus on cash flow generated by the companies. So it's really come down to a situation where it's a stock pickers market, it's a sector market. Not everything should be going up, with a correlation of 90%. And so we're going to have sector dispersions. So that's why, I'm glad, Tina has left the bar. There are alternatives out there to stocks.
Kevin, it's a great point you're making, like with the cash, obviously, getting more. And, I think about that. And, I kind of was doing the same thing. I was looking, I was go get some 3%, sit back here and kind of, let this market, do a thing. And, if I miss, I'm still getting some 3% on some stuff. There's other alternatives as well, though. I mean, we were having a little conversation on REITs on Twitter, but there's other places that you can, obviously, if you want to just move away from the Momo stocks, the FANG trade, and we've seen that come off here substantially. Talk about some of these other alternatives as well.
Yeah, it's pretty fascinating that with this increased volatility. So I love volatility, right? So because it provides a lot of opportunity in every market, right? Regardless, it's up, down, sideways. So one thing I've looked at is companies that just generate so much cash, and you don't need to, worry about their overall demand, right? Can their demand be influenced by financial conditions? And so I look at certain companies like the cell phone tower. Every time I'm driving up and down the freeway, I see cell phones out everywhere, and they're continuing to build out. And there's a couple companies, Crown Castle, American Tower. Their clients are AT&T and Verizon, who are going to continue to spend money to build out the 4G infrastructure in order for them to have 5G. So that's one of the fascinating aspects, because they've had a really, really strong quarter. Because of the defensive nature of their cash flows, as well as they can pass on the cost to the customer, right? So if labor costs go up, it's not going to matter. The guy that's putting on another antenna on on that wireless tower for AT&T is being paid by AT&T, even though it's a American Tower or Crown Castle pole. So that's the funny aspect, that there's these like little gems in the market where they're really defensive in nature, but they have crazy growth in front of them just because of this secular. Everybody has an unlimited data plan. So that's a way to think about it. In video, through streaming through your carriers, right? If I'm riding the subway, I expect to get my Netflix video in a minute or less.
I mean, you look at these charts, and these AMT and CCI have been unbelievably holding up in this type of market. So I'm like, it's something. These two stocks, I don't think we mentioned these two stocks on the show here. So thanks for bringing those up to us as well. I mean, is there any other opportunities you see like this out there? I think the chat's liking those two stocks as potential, a potential alternative to these other stocks that are going down every day.
Yeah, and one of the stocks I like, and so if you pull up the chart over the last 6 months, is Prologis. The ticker is PLD, and it's traded in a range. And one of the ways I've loved playing this stock is that I've sold the front month call against it, right? Every year every month at the money, and it's yielded about 1.2%. And it's worked out because if you wait till the stock comes below 65, you can get it around 62.5, 63, 64, sell that $65 call against it, collect. And then it's worked out time and time again, and it's run up to 67.50 and then come back down. But one of the ways I played that as a covered call is because I want to own the stock in general, and it's been extremely defensive, just like American Tower, Crown Castle. Is their CFO earlier this year in June said that their rents, so they're one of the REITs. And so their rents are 18% below market. So as their rents reset every couple of years, they're going to collect giant amount of cash flows. And what Prologis does is they're actually those warehouses in the city. So you get your package in a day or less, right? So if I order something online, I'm not waiting 2 days, right? I'm going to get it within a day. And so because I want something in a day, this is really the last mile. So I'd equate what Prologis is. Like Walmart was in the mid-90s, right? They were the last mile, right? Touch. When a product comes to you, it's the last touch, the last mile was in their warehouses. So as e-commerce sales grow and grow and grow, it's because of Prologis and their location. And so that's why the rents are up. Rents in the industrial space are up significantly because trucking and labor costs have gone up so much that rent is 5% of the overall supply chain. So you've got this company that is going to be consistently raising rents over the next few years, gives a good dividend, and it's been trading in a range where you can just sell calls against it consistently and use that as a defensive way to generate cash in your portfolio. Cash is king, so generate more cash.
The one thing with the covered call, and I just want to expand on that strategy a little bit there. We've got some option traders that come on and talk about this type of stuff, but I used to do the covered calls as well in my portfolio. I can remember doing like Walmart back when it was in this trading range for years. And obviously, it's not maybe as stable of a stock as Prologis was, but if I go back, I'm trying to remember the years I was doing it about. Walmart was like at $50 for basically a decade. And I'm going back probably to like 2008, 2009, 2010. And it would go up. Yeah. I'd buy the stock at 50. I'd rate the 55. And sometimes I'd continue to roll it every month. I'd keep writing the 55. Then I get called away. And, maybe the stock would go to 58 or 59 to come back down to 50. I'd rebuy it and rewrite the 55. And I did it. I don't know. I feel like I did it like 9 or 10 times, like over the course of it. I wasn't writing just each month. I was writing usually about 3 or 4 months out. So, and, just bringing that premium. But it's such a nice way to enhance the yield. And, and if you can find a stable stock to do it in, like I don't suggest going in these wild childs because you could lose a lot more than you're bringing in. But, you find a stable stock to do it in, that could be a really nice way to enhance the yield on a stable stock.
Yeah, that's exactly right. If you think about Walmart, right, they're giant behemoths, and they're not going to have that Facebook or Nvidia or somebody, so you can't write calls on those names, right? It just doesn't make sense. But on a name like Walmart, I remember that too, because so it's so funny because it would trade at that 55, and when you're trading options, there's a thing called pin risk where the option would actually expire at the strike price 55. So there was always this pin risk. And so I would trade around that too because it was such a stable stock and it had such big institutional ownership. And so that's why it's fascinating because this company, Prologis, is sort of unsexy too, right? It's industrial warehouses. All they do is collect checks month from Amazon and XPO Logistics and FedEx. And, it's a ho-hum, boring name, but it trades up and down in a range, and you can consistently do that. And you can go out further out, 3 or 4 months. And that's the nice aspect, because if you do that, you're actually going to own the stock and collect its dividends. If you do it on a monthly basis, like I had mentioned, that's just my style. You could get called away and not get the dividend, or there could be some situations there. But this is a great way to generate like a 12% return on a yearly basis, right? Because if you're writing it every quarter, you're writing it out, you let the stock do what it needs to do, collect it, it's a nice, safe, conservative strategy. Covered calls are the most conservative option strategy you could do.
You also put PayPal. I put PayPal in this category as well. Great trading range. I mean, that's a little bit different of a stock, but just give us your thoughts on PayPal.
Yeah, so PayPal is another one. If you look over the last 6 months, it's sort of been in this trading range, and it's a name that you can write further out of the money. So you can write 5-10% out of the money, and because it has such a high implied volatility, you can write the $100 call depending where it is, or the $95 call 3 months out, take some capital on. And one of the reasons why I do look like PayPal is because of that growth of e-commerce, because of their growth in mobile, not only here in the United States, but domestically speaking, they're actually becoming a nice alternative. They struck all of their partnerships with Visa, MasterCard. But the fascinating aspect that's coming out is that, Facebook is now looking to partner with PayPal on the payment side. And that's telling, because you're starting to see a battle royale happening between these FANG names, these momentum names that, they're no longer going to want to work with each other and battle to the death in certain areas. And so what I mean by that is Facebook's going to go with PayPal, right? Because they've got Venmo, because Facebook likes Apple, right? Tim Cook has been very critical of Mark Zuckerberg. So you're starting to see big behemoths start dividing and conquering in different aspects and going with different partnerships. So it makes sense that Facebook would go with a PayPal. So I think there's some underpinnings, even though it doesn't have a higher valuation, the growth is there. You can sell further out of the money calls. It has traded in a range, and the underlying business models there. You don't ever want to buy a company and write calls against it even if it's ho-hum, if you don't fundamentally believe over the next 1, 3, 5 years, it has a good business model.
Just like any strategy, it doesn't wherever, or there has to be an exit point, whether your stock getting called away or not having puts on the downside. What do you use for, something works, it works with a big technical breakdown below 75. What do you, because no strategy works forever. And there's times where it actually could turn into a losing strategy. So for these stocks, is it the stock just getting called away from you? Or is it a big drop and, the calls that you sold don't protect you enough? How do you decide exit strategy on these stocks?
Yeah, I love that. That's the most important thing that needs to be figured out before you enter a trade, right? The exit. And so getting back to, let's say, a PayPal, right? It depends on the premium you get and the downside protection that gives you, right? So typically it's not a lot of downside protection on the options premium. So whether it's 2%, so it could be the most. So what you want to look at is that 50, 200 moving average, and you want to look at your time frame and say, okay, the most I'm going to lose on this is going to be 5%, right? So I'm going to take in 2% and let me look at the technicals and see where it would be and where the breakdown is, and then just get out, just go. That's the downside. On the upside, when you get called away, I think that's when you kind of step back and reassess your strategy and say, okay, could it come back down here, or do I want to buy it again and rewrite higher? And so a lot of times I take a pause and just continue to watch, wait for it to get back to that price level I like. and feel comfortable with owning the stock for the long term. So for a Prologis, I would just own it for the long term anyway. So if there is a down below 60, I would reassess it and then probably sell it if it breaks down below the 57.5 level.
All right, we've been on the line with Kevin Kelly, longtime friend of the show. He's the co-founder and CEO of Benchmark Investments. Kevin, as always, thanks for the time, and have a good week.
Awesome. Thanks a lot, guys. You too.
All right.
Thanks, Kevin.
Bye.
All right, 8:56 now. Joel, anything of note to have?
We have just continued to leak here in the pre-market. We just made a low at 25.91. That low is low. So what I'm going to be looking at for us, we take 97.25. That was Friday's low. And now with the market going green to red here, your closing price of 26.0550. It's going to be a big target here if this market can rally and avoid closing under 2,600. We got a big ratings and we got a possible some merger news. Let's go to Best Buy here, as we were talking about the retailers. Bank of America has the stock underperformed today.
Yeah, big downgrade here to underperform. Price target cut from 70 to 50, and again, underperform rating. This is from Bank of America.
This stock's broken. Holy cow. I mean, $80 2 months ago, it's $52. So is it at a point where it's starting to get cheap enough? Maybe you get to a point where it starts to get cheap enough. I mean, but it's still, the trend is not your friend. And if you're trying to buy here, you're trying to call the bottom. I tell you, in all my trading years, I lost a lot of money trying to call bottoms here. So I'm going to continue to just, sell stocks, sell the rips and stocks and downtrends, buy the dips and stocks and uptrends. This is definitely in a downtrend. So I don't want to be this hero here and call the bottom. If you think about a level, it might bounce from $50. I mean, that becomes a psychological level. You can even go look sometimes in the book, and sometimes when it hasn't been there for a long time, you'll find, maybe a willing institutional buyer there that's been in there. I don't see anything in the book right now at 50, but I would think $50 is going to be maybe it takes out, maybe it goes 49, 80. But when a stock goes from like 80 to 70 to 60 to 52, it usually goes through 50. So if you buy it at 52, probably at least $2 early, I think.
It was your May of 7 under that, it was 47.68. So bunch of green candles at 16, 17, and 18, and now you're turning into some big, fat, red, ugly candles on the downside here. Your pre-market low, if you really are looking for an initial target, that comes at 51.16. Just remember, 50.29, psychological $50 level.
Look at imbalances just quickly here because there's some big notable ones. Go back to Johnson & Johnson, which we were just talking about. I said on this show an hour ago, it was 131.70. I said the path of least resistance is lower. If it takes out that 130 low, you could eventually see this at 120. I said even, sooner than later, not today. I'm not saying it today, but it's got 395,000 shares to sell here. So there's pressure. There is obviously people who say, I want the hell out. I don't trust this Johnson & Johnson defensive pick that my broker put me in is that defensive anymore. So you're seeing it down here. There's a big, obviously 395,000 shares is probably multiple sellers making a huge sell imbalance this morning. It's already traded 370,000 shares here too. Could have washed out this one. Why? Exactly. Why are you saying this? There's so many unknowns here now. There's so many people who are caught long this. Is it going to bounce? Yeah, it's going to have some wicked little bounces in there. It did even on Friday. If you look, it wasn't straight down. It wasn't like it just collapsed. It was for the first hour, but you had a bounce from 130 to 136 right after 11 o'clock. It was a 6-point rally in Johnson & Johnson. So stocks do get bounces, and that's your opportunities to sell.
Hey, Dennis, real quick. Jazz is asking about the New York Stock Exchange book. We talk about that a lot. Could you just give the 2-cent explanation on that, the New York Stock Exchange book?
I mean, all exchanges got the books. You can subscribe to them all. I've always thought the NYC book was very, a lot of old school traders, maybe, whatever it is. But, some big institutions still like to trade on the primary exchange. And sometimes they show some big hands on those exchanges. So you can subscribe to the open book. Your broker should have it. If they don't, maybe you got to look into a new broker. But it's $60 a month. So for that information, it's $60 a month. And obviously, if your broker has it. And I get my $60 from just even look at pre-market just to kind of see. The books open usually at 7:30 in the morning, 2 hours before the market opens. And you can get a feel for where there's some big fish. And where big fish are, well, that's where you'll have turning points. That's where you'll have significant action. Because, let's say, there's a big buyer in Johnson & Johnson at a certain level. Like, for instance, there's not much in the book here because we've chewed through so many levels here, but 130 is 20,000 shares to buy. It's really nothing. But, could it hold the opening price up a little bit? Maybe give you a chance? Maybe. But the thing's wild. So maybe it's not the best example. But sometimes, on nothing new in stocks like Procter & Gamble, we've been talking about forever. There's just been a seller at every point, 100,000 shares forever. So I don't even need to look at the book. I kind of already know it's probably there, but let's go look at the Procter & Gamble book for fun. 97 has 110,000 shares. We go up to 98 or 97.50, 68,000 sell. 98, 170,000 to sell. 99, I can't see 99. The book is so many levels away. I don't like so many levels. But 97, 110,000. Then you got another 170,000, 98. So these are levels where stocks will stall, because it takes a lot of money to put it through there. If you got 100,000 shares on a $100 stock, what's the math on that, Joel? It's 1,000 million.
10 million?
10 mil. $10 million worth. Did we do that right? Yeah, I think it's right. Yep. 10 mil. So take a $10 million order to take you out, or a combination of a lot of little orders to take that out. So that's why stocks often stall at big numbers, because there might be some institutional sellers at the point. We call that at the point. And if they're there, that can stall you out. And we saw it on Procter & Gamble get up to 99. You can say, well, that's not 98, 9, or 90, or 97. 96, 89 is not 97. But there's opportunistic traders that know that size is there. They got the book, they're looking at it, and they're a step ahead of it. So I always say lean on those guys. So usually, often, a lot of times you'll see the leaners lean on the other leaners. And basically, you're leaning on that, saying that it's going to hold. We said on Friday with Procter & Gamble with the upgrade, or Thursday with the upgrade at 95, that was probably going to take it out because that upgrade was getting a running start. And it did. It blew through that one, blew through the next one, but found another seller again. These stocks tend to stall where they find big sellers.
Wasn't there a millionaire?
97 is significant now.
Was there a millionaire at 95?
Million 95. So a million shares times $100 stock is $100 million.
Keep that in
$100
mind.
million worth of stock of Procter & Gamble to buy that, to take that through. So it got up there. Look how many times it got up to near that 95 and could not do it. Couldn't find the 100 million. So it got 94.81. November 16th got up there. Then he got 94.67. Then he got 94.67. Then he got 94.86. So multiple times up in the upper 94s. Could not get even near, because, like I said, there was even a big sell at 94.90, because they probably got the book and they're like, wow, I'm going to get in front of this million guy, so I'll sell my 100,000 shares in front of the million guy, probably a different, or maybe the million girl. Try to take that out, and that's why the book has relevance, especially in the pre-market. The little stuff, yes, there's a lot of envelope orders. Yes, it doesn't have as much relevance as it did 20 years ago before you had high frequency trading. Everything's moving around. But when you find that institutional size, you need to know where it is, because that stocks can stall.
Dennis, we kept you 4 minutes over time, so why don't we let you go? We're going to cover Jack in the Box. There's some news out on that. So, Dennis, thanks a lot, giving us a lot of good insight today, and we'll check in with you a little bit later on.
Have a great day.
All right.
Jack?
Yeah, let's get to this Jack in the Box story. So if you recall, back on November 29th, there was a report from Reuters that Jack in the Box could be exploring a sale. Stock popped, I think, about 6% on that day. Maybe it was just under 6%. I think it was, 5.9%. That was on the 29th. They confirmed that report this morning. So they confirmed that it was halted, it resumed, and they confirmed that they are exploring strategic and financing alternatives that would include a potential sale. So that is the catalyst here this morning. It's up another, last I checked, 5%, Joel. And what's it doing as of the second?
Well, it got a pop here, nowhere near the pop that it got on when the initial rumors hit, when it went to 90.49. You just got a pop here over $85 at 85 and a quarter. Not seeing much there as far as resistance. I see a couple highs just around the $86 level. But with things like this, let's hear more from the company. Let's hear a price. Let's hear who is coming in and what they're going to pay. If not, these things maybe will tend to fade on you. But then again, you don't want to be really shorting a stock that's in play here. So this has been a sector where there's been, Panera, right, went private, Buffalo Wild Wings, and we can go on. It's been it's been an area merger and acquisition. So if there's smoke, there's fire. Let's see if anything happens in Jack in the Box.
One thing I'll add to that.
Anything else you want to cover?
Yeah, I want to add to that real quick. The day that initial report broke on the 29th, Baird chimed in, the analyst from Baird said, based on as the EBITDA, that would translate to roughly $115 a share. That's the only, and that's obviously purely speculative, based entirely on 16 times EBITDA for Jack in the Box. But that's what it would come out to. It would be $115 a share. That's the only price I've seen, but obviously nothing concrete to report here. Just that they are exploring alternatives. Like you said, there has been a lot of activity in the space, and we have seen, where there's smoke, there tends to be fire. As we're seeing this morning, just look at Boeing and Embraer. They're acquiring 80% of the company for $4.2 billion. That was reported, I feel like, months ago. So, when you tend to see these M&A rumors that maybe you hear about, then they go away and they resurface. There tends to be usually something there. Last thing I want to do real quick is run through things today. We got the Best Buy rating. I just want to do a couple more.
Sure.
Because we had Lulu graded at Stifel Nicholas to a buy. They announced a $151 price target. That's a big upgrade there. There was another one I want. Oh, yeah, we had Axon, AXON upgrade at Jeffries to buy. And we had the Best Buy downgrade. Those were, I think, the big three on looking through my list right now of ratings today. We had Axon upgraded Jeffries, Lulu upgrade Stifel. We mentioned the Best Buy downgrade at Bank of America. You want to look at Lulu real fast?
Yeah. Well, what's the symbol on Axon?
AXON.
AXON?
Correct.
The dollar stock?
Yeah, they upgraded, man. Jeffries.
Well, the most you can lose is $1.13. I'm not even going to comment on that one. The Lululemon, I mean, you're getting a pop, a little bit of a up to 129. That's your last print. Your pre-market high is 121.40. I think I'd rather buy that thing at 122 than trying to pick it up here. There's a lot of overhead supply after that big red candle. And man, retail is just out of favor here. So I'm not going to be making a move here on Lululemon based on this upgrade. And just Adobe. Someone mentioned Adobe that had a bad day on Friday. Things are continuing in a bad way, trading on the lows of the pre-market session at 225.10. When I look at this Adobe chart, I just see air all the way down until that low. You had the low of the move was 218. No, even lower than that. You had a low. When was this? In November at 207.02. I mean, things just look like really thin here. I can see some daily lows, but boy, oh boy, not a great looking chart there in Adobe. To wrap it up with the S&Ps here, folks, we're traded 2 points off the low of the session. Your pre-market low was 25.90.50, or your current low. We'll have 20 minutes before the open. When I'm looking at the rollover into the March contract, and that rollover was a tricky trade last night, April 4th low was 25.72 1/4. So if you're looking for a little bit of a target on the downside, below that 64.75 was your April 2nd low. And for me to feel a little bit better about this market, I think you get back over 2,600, which we're not that far away, and post a green close today. I think that would be something that would be good for the market. So hope you guys gave you a little bit extra information here. And Spencer, you want to wrap up and preview Tuesday's show?
Yep. Catch our podcast if you missed any part of our show or you want to hear us again. iTunes, Cloud, Stitcher, TuneIn, Google Play us on YouTube. Thanks to our guest, Kevin Kelly. Please remember, information from our show is for informational purposes only and not meant to be investing advice. On that note, we'll see you folks on